Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we're diving into some heavy metal. Not the music kind, but the industrial kind. The title says it all. Trade tariffs on steel and aluminium. What's the fallout in the latest trade escalation? Right, so it's on February 10th, 2025, President Donald Trump dropped a bombshell with new tariffs, and the ripples are already hitting global markets. So let's unpack what's happening, why it matters, and how we might turn this chaos into opportunity. Buckle up, right? We've got a few minutes to break it down. First up, the big news. On February 10th, just 11 days ago, President Trump signed an executive order slapping a flat 25% tariff on all steel and aluminium imports. No exceptions, no exemptions. Right, that's a big shift from his first term, when allies like Canada and the EU got carve-outs. This time is full-on effective March 12th and is aimed at boosting US production. Trump called it a move to make America rich again, but is already sparking a global trade firestorm. Canada's mad, the EU's threatening countermeasures, and markets are jittery. So why are steel and aluminium the hill to die on? Let's talk about that. Steel and aluminium aren't just random commodities. They're the backbone of construction and infrastructure. Steel's your go-to for everything from skyscrapers to bridges. It's strong, durable, and everywhere. About 79 million tons were made in the US last year, but we still imported nearly 29 million more. Aluminium's lighter, but just as critical. Think power lines, building facades, even your car's frame. Together, they're the skeleton of modern life. When Trump says these metals are a national security issue, he's not totally wrong. Imagine building a highway or a military base without them. But here's the kicker. US manufacturers rely on imports for about a quarter of their steel and half their aluminium. Tariffs jack up those costs, and that's where the fallout starts. So how do we play this mess to our advantage? Pricing dislocations are already popping up, and that's where opportunity hides. With tariffs hitting, imported steel and aluminium prices are spiking. Aluminium's up about 1% to $2,666 a ton. And steel traders are scrambling. Domestic producers like Nucor or Cleveland-Cliffs might see a boon, sure, but their supply can't fill the gap overnight. That means shortages, delays, and price swings. Smart investors could jump on US metal stocks early. Those pre-market gains after the announcement weren't a fluke. Another angle, look at substitutes. Right? If steel gets too pricey, companies might pivot to alternatives like composites or recycled materials. Firms in those spaces could quietly cash in. For the savvy, there's also a global play. Canada's getting hammered. They supply 25% of our steel imports, and their dollar's dipping. Buying Canadian assets or hedging against their currency could pay off. Same goes for arbitrage. If Europe retaliates and their metal prices drop, you could source from there before the tit-for-tat escalates. My point is, chaos breeds gaps. Now find them, exploit them, but move fast before the dust settles. And that's our quick take on Trump's tariff tango. Steel and aluminium are critical, the fallout's real, but there's money to be made if you're sharp. Until next time, stay ahead of the curve. This is Trade Tariffs signing off. Thank you for joining us in today's episode. In the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.